Hello, everyone. Thank you for your time meeting us online today. As you might have already seen from our announcement in January, we are very pleased to let you know that we had a fantastic year. In the last year, we grew 51% and we have beaten the market expectations. In today's presentation, we'll talk about our company and our full year results for 2022, and we will also talk about our future growth plans. Just to give you a very brief introduction for our company, Hercules Site Services PLC is a technology-enabled labor supply company operating in the infrastructure sector. Next slide is our disclaimer, and the slide after, this is our board. I am Bruce Korkmaz, I'm the CEO for Hercules, and today I'm joined by our CFO, Paul Whitcroft.
Hi, everybody.
As you can see from this slide, we have a very strong and well-respected board with both exec and non-exec directors with great blend of experience in infrastructure, financials and banking, sales, PLC, governance, and even starting and running their own listed company. Together, we believe that we can grow Hercules even further. Next slide. This is our business overview. This slide is about us and how we operate as a business. As you can see at the top of this slide, some of our blue chip clients that we work for. As I mentioned before, we are mainly a labor supply company working in the infrastructure sector for our blue chip clients and complemented by our construction services division. Our labor supply department is a significant part of our business, which currently contributes around 75% of our turnover, and this number is still growing. Under the construction services division, we have our suction excavator services, and we also carry out civil projects under the same umbrella. As you can see, we are offering a few different services for the infrastructure industry, and the biggest USP we have got is that we can supply all of these services by cross-selling opportunities to our clients under the same umbrella. As you can see at the bottom left corner, we also developed our apps in-house. Our Hercules recruitment app is the first one. This helps us to find local labor for local projects. And our One Team app helps us to onboard them efficiently in a paperless process. These two apps that we developed are really working for us to locate local labor, and we are onboarding them efficiently so they can start working with us the next day. You can also see at the bottom right corner of this slide that we have developed our See Everything portal, which stands for Skills, Education and Employment Portal. We have developed this product for our client called Balfour Beatty Vinci Sistra joint venture working at the HS2 Old Oak Common Station. We managed to license our C portal product to our clients, so we started monetizing our digital product. As you can see from these products that we have developed in-house, our digital arm differentiates us from our competitors, and it underpins the whole business. Next slide is about our timeline. As you can see from here, we've got a very strong history of growth. I set up Hercules in 2008 from a family spare bedroom, and since then we've been growing every year. You can also see from this slide that we have got several milestones that we've achieved over the last 15 years. Just to mention some significant milestones: winning the HS2 labor supply framework in 2021 for the northern section with Balfour Beatty and Vinci joint venture. We are one of the 6 labor supply companies providing labor for this mega project, and we are performing really well there. Even though there are 6 labor companies on the framework, and we are one of them, we are supplying 25% of the whole workforce. So you can see that our apps are really working for us. We are finding local people for local projects, and we are onboarding them efficiently and faster than our competitors. At the beginning of February 2022, we listed Hercules on the AIM market, and this is a major milestone for us, and we are very excited about this, being on the AIM platform. We believe that this platform will enable us to grow as we have ambitious plans for the next part of our journey. If I'm moving on to the our training academy. In August last year, we selected a site for our training academy, which is in Nuneaton. This site is very close to the northern section of the HS2, which will help us to upskill and cross-skill our workforce. We believe that we can also monetize this opportunity. As you are aware that there is a massive skill shortage in the UK, and we believe that upskilling and cross-skilling our workforce will help us to close this gap, and also this will also help us to monetize this initiative. Our sustainable approach is to find local people for local projects, train them up, put them to work, and retrain them for upskilling opportunities. And lastly, we have started our 2 new divisions in November. They are our construction, white collar and construction site security divisions. And these 2 new divisions started really well for us, and they have already started bringing some income for our business. Next slide is yours, I think, Paul. I'll move to your slide.
Thanks, Brusque. Yeah, it seems a lot longer, but it was actually a year ago we launched on AIM, and boy, was that an exciting time after a huge amount of work to get us there. We successfully listed and we raised £4 million gross. And as Brusque has just said, we've had a very, very successful year, but it's not the only successful year. We've now had 2 very successful years, both of which have grown our turnover by more than 50%. So it's the second year in a row. So they were both record activity years for us. And we're doing very well in the current year. We're halfway through. And I can't say too much about our interims until they're announced, but we're well on the way to achieving a similar increase in the current year. So we're very pleased with that. We're very, very busy, and our services are in great demand. This growth is not like a little pocket. It's across all the main areas of our business, the 3 main areas. Brusque has already outlined is labour supply, and even though the northern section of HS2 is a big part of that, wow, is there lots of other projects going on as well, and that has driven a very big increase in turnover in labour supply, and will continue, we think, for some years. Civil projects, really, this is the area of the business where we do price type projects. We tender for a job, and if we win it, it's a fixed price. And whereas it's not a large part of our business, it's probably about 15% now, but it will probably, as a percentage, go down, even though the turnover will probably increase year on year by reasonably small amounts. We manage that carefully, and in fact, that was a 50% increase in turnover in the last financial year. Suction excavator services, we only started this in August of 2020 with 2 vehicles. We started a last financial year with 9, ended it with 16. And as of about a week ago, we've now got 30. That's our maximum fleet. That's our sweet spot. And we're looking forward to delivering great performance with our fleet and looking to achieve our 80 to 85% utilization rates, which is fabulous and far better than we ever thought we could do when we started that particular business. We think we've now got one of the largest fleets in the UK, and we're supplying a service that is in great demand with our blue chip clients, all the ones that Brusque was showing you on one of the previous slides. It's not limited to those 3 though. We've got some other new sources of income, all fledgling. We've talked about white collar, we've talked about security. The training academy will come in next year. We've got some other types of training that we're doing. We've also got the digital products revenue. We've got our mobile health screening trailer that we're monetizing. So all these areas are adding value to the business and complement the rest of our offerings very, very well. We have the infrastructure, if you like, to actually deliver that. So what does this mean to shareholders? Well, we've paid now 2 years of dividends. We said we would. We said at the IPO that we had a progressive dividend policy, and that's exactly what we've delivered. First 2 years, delivered those dividends, and we see it as a as a contract with our shareholders. We said we would, so we intend to do it. Great news for our shareholders. We just only about a month ago did we pay the final dividend for the previous year, and no doubt we'll continue with this process with interims and final dividends in the years to come. Finally, this is very important. We're big on saying one thing and then doing it. At the IPO, we said, look, there's a skills gap. We've got to do something about it. The whole country needs these extra skills. We need to build a training academy. We spent quite some time after the IPO trying to find somewhere, and as Brusker said, we found somewhere in Nuneaton. We completed the lease in August of last year, and we're well on the way to getting that ready to be able to deliver services to clients and raise more funds, new income streams, and retrain those people, keep that training circle moving round. So that's all about, that just shows you what we've achieved in the last year, and there's lots more to come. This is our group statement and shows you how the numbers that we achieved in the year ending September 22 and how it compares to the previous year. So yeah, you can see there we didn't quite make 50 million turnover, but almost, and that was the 51% increase, second year in a row, as I've said. And the good thing here is that we told the market what we would achieve, both in turnover and EBITDA, and we beat them both. So we're, again, another example of what we say we're going to do, we set out to do, and that's what we achieved in 2022, first year of results post the IPO. Now, one of the things that you will see from this is that because we're growing rapidly, we knew this growth was coming before even COVID came along. We could see what was happening. But before COVID, we were a relatively small private company with quite a lean business, but we knew we would not be able to deliver on all this unbelievable growth that we knew was going to come. That's already come, and that's going to continue to come in the years into the future. So we had to start developing our systems, our procedures, our management structures, our administrative skills, to get us to a good level of corporate governance. And that, of course, meant that we had to increase our overheads. This was all planned. We made it quite clear at the IPO what we were going to do, and we explained it. And of course, the other element that's added to those overheads is the suction excavators, because you get additional overheads with those. You get maintenance, insurance, consumables, all sorts of costs, and that has contributed to boosting those overheads. But now we've got our 30 suction excavators. We think we're very well placed. We think that overhead growth is now going to tail off. So all the future revenues that we generate, pretty much all of those is going to go to our EBITDA line, which is and our PBT lines, which of course is the important thing. So the other thing worth pointing out, of course, the IPO straddled these 2 years, these financial years. So you can see on those exceptional items, we've got 1.5 million of exceptional costs. This is pretty much all the IPO costs. So our PBT would be considerably better if it wasn't for the IPO cost. But it's a one-off. We're not doing it again. We're already there. So yeah, that's our performance, and we're very pleased with it. This is our balance sheet. It's a very straightforward balance sheet, but it's worthwhile just explaining what's in it and why things have grown. We have fixed assets. The suction excavators are the biggest fixed assets. To put you in the picture, they cost about £500,000 each. And at this point in time, from September, we had 16 on the balance sheet. The previous year we had less than that. I think it was 9 we had. So we've also got properties that, as you know, under IFRS we have to show in the balance sheet, and we have to depreciate them over the life of the lease for the properties. So they're in there as well. Our current assets are mainly the debtor book and the accrued income or work in progress for civil projects. And if we grow your business, anybody who grows their business by 51%, it's going to show an increase in the debtor book and your work in progress, and that's the reason for that. In the bottom half of the balance sheet, the liabilities, well, again, that really follows the top half in some respects. We've got the lease values of the property leases, which you have to show as a liability. The suction excavators have all been financed externally on conventional asset finance, so those liabilities are in there. And the third and minor element, I say minor, predictable element here is an invoice discounting facility. Why do we need that? Well, we pay our operatives weekly and invoice our clients monthly, and they pay typically on 45 to 60 day terms. So we need working capital to fund that, like everybody who's a labour supplier does. So within that, those liabilities at the end of 2022, I think there was about £6 million of the invoice discounting facility at that point in time. So that's our balance sheet. You can see how these things have grown, growth in the business, in the trading of the business, and in getting the suction excavators and the liabilities that come with them. Brusque, over to you.
Thank you, Paul. Strategically, we are well placed to benefit UK government's continued investment in the infrastructure sector. If you look at the first bullet point, it says 2021 national infrastructure and construction pipeline sets out nearly £650 billion of public and private investment over the next 10 years, of which £200 billion is to be invested by 2024-2025, supporting an average 425,000 jobs yearly. These numbers are quite big, as you can see from this. Second bullet point states that estimated 217,000 new skilled labor required in the UK construction industry by 2025. There is also huge investment being made in Hercules' core markets in the next 5 years, which £22 billion to be invested in for HS2, £17.5 billion for the railway, £27 billion for strategic roads, and £525 million to bring forward developments in nuclear power. As you are aware, in the last budget, government has recently classified nuclear energy as a green energy, so more investment can be made, so we are self-sufficient with energy production in the UK. And the last bullet point states that labour supply is high on the industry's agenda, demand is close to 20 years high, compounded by demographic change and Britain's exit from European Union. Companies like us are expected to employ local workforce. As you can see from these 4 bullet points, there is a huge investment being made in the UK infrastructure sector, and our clients require people to build these projects. Also, there's a skill shortage in the UK. So that's where Hercules, that's where us come to the equation, to help our customers, our clients, to deliver these mega projects by our sustainable approach, which is finding local people for local projects by using our apps, then training them up by using our training academy, then putting them to work, as this is what we do and we are really good at it, then retraining them for upskilling opportunities. We believe that this sort of approach is very important for the industry and also very important for our country. Lastly, we believe that our competition is very traditional with privately owned companies, and they do not offer different services like we do. So our clients like to use our different services from us as a one-stop shop. We also believe that our innovative and digital approach is noticed by our blue chip clients, and they are continuing to give us more work. And the next slide, I'm just going to come to it. This is our growth strategy. And as you can see from this slide, we have multiple growth opportunities in the infrastructure sector. First one is the organic growth. This year started really well with all the 3 divisions growing, and we have got a very strong pipeline of projects into 2023. With regards to our training and our training academy, we want to monetize these opportunities. As I had mentioned before, that we have started 2 new divisions, which are our white collar and our site security divisions last November. So they started bringing some income, and we want to also grow them for the next few years. With regards to our digital arm and our digital product with C Portal, our aim is to push this product to other blue chip clients and other projects. With regards to our suction excavators, we received 10 suction excavators, as Paul mentioned, last month in March. So we have now 30 suction excavators, which is one of the biggest fleets in the UK. And our aim is to keep it to maintain our 80-85% utilization rate. And as Paul also said as well, the 10 suction excavators will bring income towards this year's results. With regards to the subsidiaries and partnership approach, we believe that this will help us to accelerate our labor supply growth into new geographies and into new sectors by partnering with ambitious managers. You might have already heard a company called Mighty PLC. They started this approach. They are the ones that founded this approach years ago, and this enabled them to grow really, really fast. So we believe that this sort of approach is very suitable for our labor supply division. Lastly, we are talking to a few labor supply companies, and I can't give very much information about this, but we believe that the next few months will be very exciting for us with regards to the acquisition opportunities. Thank you, everyone. So I'll pass you to Paul for the next slide.
Yeah, so thanks, Buzz. So, and to summarize, what's our investment case? Well, why Hercules? Well, some great bullet points here. We've got a sustained track record of revenue growth over 15 years, particularly the last 2 or 3 years, serious growth. We've got a positive performance across all our 3 major divisions, plus some of the other income streams that I mentioned earlier on. We're 6 months into the current year, and the strong momentum has continued. We're very, very busy. We've got these cross-selling capabilities. We can sell one service to one client. Before you know it, they want another one, and that moves around all the time. So we build relationships with all of our clients bit by bit across all these 3 services. We talked about the investment into the country. There's a huge market opportunity here, and we're very well placed to gain market share with our framework agreements with all the major blue chips. And with the strategic partnerships that we built, the relationships of, it's mostly this man here, Brusky, is the one who's built the relationships over 15 years. And that's so important because relationships are everything in construction. We've got so many different multiple growth opportunities. You saw the growth slide previously. Never mind acquisitions and partnerships, organic growth. There's so much to go for. Finally, we have a progressive dividend policy. I mentioned this earlier on, and this is important. Our intention has always been to maintain that policy and to develop it. So we started out saying that we intended to be between 2 and 4 times dividend cover to start off with, and we intended to get that to between nearer 2 to 3 as the years progress. I think that was, at the time of the RPO, that was a yield of around 3%. But that's our plan. We aim to share the benefits of the success of the company over the years with the shareholders. That's it. That's our investment case. Thank you very much, everybody.
Thank you very much, gentlemen. Very compelling numbers there. So we're going to get into the question. We have got a few questions here. And actually, Paul, you did address one here. We had a question from William that asked if you'd be able to explain the dividend policy in more detail a little bit earlier on in the presentation. But I feel that last bullet point there, you did a very good job of that. So we're going to move on and address some of the other ones. We've got a question here from Paul, who asks how much in a percentage terms of revenue is generated from HS2?
It's an increasing percentage, as you would expect, given the growth in the level of activity. And it's the HS2 northern section we're working on, not the southern section. But that revenue percentage currently in the first half year is something like 32%, I think.
Thank you. So there's actually 2 questions here, and these are in relation to the training academies. And one question very basically asks, what does the model look like? I think you touched on that, but I think you'll probably provide a little bit more detail in the answer to the next question, which came in from Tim, who notes it's incredibly complicated and time-consuming growing an industrial training school from scratch. He said he's done it himself. Would you consider purchasing an existing training company rather than starting a standing start approach?
Paul, shall I jump into this?
Yeah, please.
Okay, thank you. I think it's a great question. As Tim mentioned in his question, it is very complicated and time-consuming, but we have got a really good training head of our training, ex-CITB Construction Industry Training Board manager, knows everything inside out with regards to the training. And the thing with this training academy, that we want to upskill and cross-skill our workforce first, and then we should be able to monetize it. So our aim is to be able to do it for our teams, and we know where the skills gaps are in the UK, especially in the infrastructure sector. And we will be partnering up with. We have already started talking to our clients to partner up with them to be able to train their workforce, as well as to be able to offer different services. Could be steel fixing, could be carpentry, shuttering carpentry for the big bridges that will be built along the HS2, and potentially in the future about the nuclear power energy plants with lots of civil works involved. And we are talking to the right companies to be able to partner with them, steel fixing and shuttering companies, as well as plant operational companies. So yeah, we will be working with these companies as well.
Lovely. So we've got a few minutes left, and this is a question that we actually had here from the team, and it's really one about the type of clients that you deal with and the projects that you supply, and the relationship to the underlying health of the economy. So obviously these are big infrastructure projects planned years in advance. From your standpoint, any gyrations in the underlying economy, I mean, is that something that doesn't really impact your business, or is it something that might impact you in 2 to 3 years' time?
Paul, shall I jump on it? Then you can.
Thank
you. So with regards to the spend so we don't. When we are talking about we're in the construction industry, we do not work in house building at all. We work because house building goes up and down with the investments, with the certain house prices, depending on the inflation, depending on the interest rates, etc. But with regards to our work, infrastructure work, it is a must. There are so many old roads, and the UK logistic, is growing with regards to the delivering more parcels to the houses. More people want to go from A to B quickly. So as well as there is a massive investment in the AMP periods, as well as in the infrastructure. We mentioned about the energy and renewable energy as well. So these are these have to be done in order for us to be able to keep developing, our infrastructure to meet, to be, for example, self-sufficient with energy, as well as bring north and south by using HS2, take people from all the way from Old Oak Common Station or Euston Station and take it up all the way to Manchester. That is the whole point of doing it. So, and it will come in time, these bits. So we believe that we will be really busy within the next 15 years.
That's great. Thank you very much.
Did I miss anything? Sorry.
You got it.
Okay, thank you.
That's very good. And that takes us up nicely to the end of the session. So Brusque and Paul, thank you very much for being with us today.
Thank you, Jonathan, and really appreciate everyone. Thanks for listening to us. Thank you.
Thank you. Thank you very much.